All right, today's Wednesday, May 21st, 2025, and I'm Jason Shapiro, trying to figure this one out. So, we came in and there was some news about Iran overnight and Israel bombing their nuclear sites, and the markets were weak on the back of that, and oil was up, of course, and all that. And we rallied right from the get-go again. And everything was looking pretty good with the NASDAQ leading and all that kind of good stuff. And then we had what seemed to be a negative bond auction. Didn't seem hugely negative, but was certainly negative. And this was the macro dream. The macro people right now are very bearish. They're bearish because of this exact reason. There has been no respite whatsoever on the deficit. And with the new tax bill, doesn't look like there's going to be any respite on the deficit, and that's a problem. Rates can go up, and that's exactly what happened. So the bond auction came out bad. You can see it in the bonds. The bonds got crushed. All of the maturities got crushed. 10 years, 5 years, 2 years, they got crushed. And with that, that just brought all the stocks right down with it. So it's a victory for the macro people today. So good for them. Oil, like I say, was up on the back of the Israeli news last night and just sort of went down all day. And then there were some bad inventory numbers as well, and that pushed it down even further. The inventory news was here. And so, again, not trading well, not trading like a bull market. I would say the stock market, which has been trading like a bull market, meaning doing very well on good news and not doing very poorly on bad news, did not do that today. It traded poorly on bad news. So something to think about, tone, a little bit of a tone change. We'll see if there's follow through on this. If the market is any good, then I would expect there to not be very much follow through. But if the market's not good, then look out below here. The macro could start to take over. So, gold should go up on that and did, although I would have expected a little bit more, quite frankly, because it did come off. The dollar also was a little bit of a surprise, I would say, in that if you look at the flight to quality things, this was when the auction came out and the yen went up, as it should, but it came off straight from there. And for that matter, so did the Swiss, right? Swiss went up a lot on the auction, came off after the auction. So I don't know, it didn't close down or anything, but certainly something to pay attention to there, I would say. I would have expected a lot stronger Swiss and a lot stronger yen and a lot stronger gold for that matter. It's one day, these markets are a little bit crowded, so to have any kind of huge move makes it a little bit difficult, but just kind of a little bit surprising that stuff wasn't stronger. And Bitcoin continues to trade well. It was up during the day, came off a lot on that bond auction, but look how much of that rebounded while stocks did not rebound. Bitcoin still traded very well and seems to be the place to be, both on a macro level and more importantly, on how it's actually trading level. If you believe that Bitcoin is the place to be macro-wise, that's great. The market is confirming that belief. So clearly, as I've been saying for a while now, Bitcoin is not the thing to be short here at the very least, right? And that was pretty much it today, Again, I think in summary, the macro people got what they wanted today. And the markets gave them what they wanted as well. So that could be a little bit of a shift here. So let's see how this stuff, if and when, let's see how this stuff follows through. I still think that people are too bearish on this macro belief, but, and I'm basing that based on positioning, but positioning can get trumped, no pun intended, if the macro continues to deteriorate. And, if we look at the bonds, truthfully, they have now gotten to a point where they are below what was the freak out level back in April. So you know, it could be a potential problem here. You know, to me, it's not the fact that the higher rate thing, you know, and all that. It's just the fact that there's no bid for bonds, and that is the center of the macro universe here, and it's going to be tough, you know, for U.S. assets, obviously, to maintain if bonds continue to fall like this. So, caution in the wind. Let's see how the things trade on the back of it. Clearly, they didn't trade well today. All right. So those are my thoughts today. Please check us out, crowdedmarketreport.com, and we will talk again tomorrow. Thank you. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, you know, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, you know, give it a shot. All right. And we hope to see you there. Thanks.